Hey everyone, welcome back to Corporate Dakota. Today we're diving into a document so thrilling, it's almost as exciting as watching paint dry, but with numbers. We're checking out Vroom Inc.'s latest filing, a document packed with information about this online used car business. It has a very interesting story to tell after some big changes. Prepare for some surprises. First off, Vroom went through a prepackaged bankruptcy and emerged January of 2025. That's a fancy way of saying they restructured their debt in court, but they had a plan in place ahead of time. This was all part of a value maximization plan, which sounds like corporate buzzwords, but it basically meant they stopped trying to sell cars directly online. So what happened? Well, November of 2024, they filed for Chapter 11 bankruptcy. A debt of $290 million was discharged, meaning it went away. The old stockholders basically had their ownership wiped out and new shares were issued. This all means their past financial reports are basically useless for predicting the future. The company now has a different financial structure and will be applying fresh start accounting. The company has a new long-term strategic plan that focuses on its remaining businesses, UXA, their auto lending arm, and CarStory, their data analytics platform. The plan aims to cut costs and bring UAC back to pre-COVID levels of profitability. As of December of 2024, they had about $29 million in cash. This might not be enough, as they might need more to operate the business. They need to maintain and develop UAC and CarStory. It's tough. Let's address the elephant in the room. The company's long-term strategic plan may not work. A failure in a plan can hurt their remaining UAC and CarStory businesses. They mention that they have a history of losses and may not be profitable going forward, so expect more ups and downs. In fact, they had an accumulated deficit of over $2 billion. Another risk, UACC, the lending arm, might not be able to sell its auto loans. These sales are how they make money and maintain liquidity. And this is a tricky one. Their stock was previously delisted from the NASDAQ. That means they might not meet NASDAQ listing rule, which is super important for investors and trading. There is a table of contents. Let's scroll to one of the section. Okay, let's jump into those financials, which are very important in this report. Looking at the unaudited pro forma balance sheet, we see cash and cash equivalents of $29 million in the predecessor company. And as a result of adjustments of the Chapter 11, it is reduced to $28 million in the successor company. Finance receivables at fair value is a good number to look at. It jumps from roughly $500 million to $826 million. This seems great, but finance receivables held for sale, net goes to zero. They changed their method and accounted a bunch of it under fair value. That's why it jumped. Looking at the income statement, we can find some interesting numbers. Net interest income barely changed from $142 million to $146 million. However, realized and unrealized losses are at $110 million. In other words, the net effect is more than a 50% profit reduction to just under $16 million. Following their emergence, Mudrick Capital Management, one of their note holders, owns over 76% of the company's stock. That is a lot. This means they can strongly influence any major decision for approval. So what's the overall story here? Vroom is trying to reinvent itself after a failed attempt to disrupt the used car market. They're now betting on their financing and data analytics businesses, but they face significant risks, including a tough economy, increasing credit losses, and the possibility of not being able to access the capital they need. They also must find a way to meet the high expectations that come with being a public company, all while avoiding further missteps that could lead to additional regulatory scrutiny. Trading in Vroom's stock is speculative and high risk, so what is my opinion on this? They have a mountain to climb, but who knows, maybe they can pull it off. That's all for today's Corporate Dakota. Please like, share and subscribe and let me know what report to read next.